Hey guys, welcome back. This is Coach JR from the Profit Flow Group. And today I just want to talk about what's happening in the US investment banking arena. We have now Morgan Stanley versus JP Morgan versus Goldman Sachs versus the retail trader. Now, what we have to say is what's happening. Should you be scared? Now, remember, this is a business. And what I'm about to do is just go over the different ETFs representing SPY. That's for the S&P 500. Also, I'm going to review the Qs, QQQ, see how's the Nasdaq doing. What I can tell you, I see potentially 17,000 by the end of the year, 2021. And then, finally, small caps, Peter Lynch. What's happening? I will come back later this week with my tech arguments, why it's happening, why I think you should be ready. You need to have your trading account or your investing account. It doesn't matter if it's with E-Trade, Robinhood, Ameritrade, Tastyworks, I don't care. You must be ready because there's coming this stampede of money rotating to small caps and you have to be ready. Remember how Peter Lynch made a name for himself trading small caps? Well, that's coming back. So I will take a look at the IWM. Now, everyone, I know it may be scary, but every one of these investment banks will give you a little bit, they're working for you. So I'm gonna look at what I have on my screen and look at Morgan Stanley. They're calling for a destructive. It's gonna be the end of the world. 20% crash. That is gonna affect the bull run. It's not gonna affect the bull run. It's telling you that you might get stuff at a 20% discount. You might even get SPY for a 20% discount. That's what it is. So I want you to pay attention because we're looking at if this happens, and that's a big if. If this happens, we're looking at buy SPY at a 20% discount. If you're looking to add something and want to play a little bit more of the passive investment style, then that will be perfect for you. Think about having the opportunity between 2021 and 2022 to get SPY at a 20% discount and then keeping it for 10 years, 15 years. That's an extra 20% for you, right? Thank you, Morgan Stanley. Now, on the other side, we have Marko Kolanovic, the genius quant trader. I think he has a PhD in physics, so you know, that is telling us, you know what? This particular retracement, this pullback is just a technical pullback. May he be right. Let's take a look at trend Fibonacci and assess what's happening. And at the same level with JP Morgan, we want to take a look at potentially price rotation, my strategy for you to walk into the unknown. We talk about a lot in the US when it comes to not knowing what's next for a stock that is at all-time highs. We talk about price discovery. But if you think about it, that doesn't tell you anything. It's just like, okay, the stock, the asset will start discovering new prices. With price rotation, you will have two objectives, a conservative objective, and then you will have the more aggressive view on that particular asset. All right. Now, finally, I'm going to take a look at the IWM small caps, but look at what Goldman Sachs is doing. No wonder why they are the best investment bank in the world. Whether you like them or not, that's just the way it is. Buy during tough markets. That's the message. That's what they're saying to their clients. Buy in tough markets. Hey, it's not going to get better. There's no this whole thing of time in the market. We keep talking about it. People keep trying to do it. They're looking for this super precision. Sometimes you're going to make it. Sometimes. I know that as a coach. I have guys that they make 100% in a day buying, and then they short the same asset in the day and they make it 100%. That they're very skilled. Are they going to do that every day? Nah, I don't think so. But they do it from time to time because they have been doing it for years and they are laser focused in what they're doing. But that's not for everyone. So Goldman Sachs is just speaking the truth. Hey, buy now and be ready to buy a little bit more. Now, these three investment banks are not different from the views from, example, Catherine Wood from ARK Invest or Tom Lee from Fundstrat. They all have different views. Catherine talks about how millennials are the new force in the market that no one sees how it's going to create this massive disruption and will boost this bull market because either we have a pullback at a 20%, as Morgan Stanley indicates, or we're just going to be in another 10, 15, and that's just business as usual. So millennials are that new force. And you have companies like Robinhood, Webull, also you have eToro coming from Israel in the US. And now you also have PayPal talking about offering stock trading services. So there you go. More technology, a more democratic market for everyone. And finally, I want you to think about one more thing. If you look at what Tom Lee talks about and all these bull cases, Lee and at the same time, you have the bull case that Wood is explaining every single day. Bitcoin 10 times in the next 5 years, 500,000. That will have an implication in companies, mining companies that are in US exchanges. So think about it. All right. So let's jump and take a look and go directly to the charts. We start with SPY. Now look at this. Based on the lows back on May, we have a level 403. And this new high, we have a range. This is the full rotation between 403, 453. That's 50 points. Looking at a continuation when the time is right, then we have a projection. We'll have SPY trading not too far from the 506 level. That can be, believe it or not, that can be by the end of the year on the first half of 2022. If we have a breakdown from 403, then we definitely have to consider a move lower to 383, and only if we get to that level, then we can say that there's a little bit of a threatening in the bull market. Until then, Morgan Stanley is absolutely wrong. They are giving us an idea that we can actually get this way cheaper. Now let's take a look at the QQ, and the Nasdaq. It's absolutely setting themselves up for success. You see how Microsoft is doing so good. They're coming from buybacks, and buybacks are just a way to tell you that we may not need your money anymore, investors. So prepare yourself. That thing's going up. At the same time, you still have a lot to squeeze from Tesla. Tesla's just keeping themselves above 700, but the most important is that they have been trading for the last couple of weeks above the 650 level. That's very important to keep an eye on Tesla. But if I look at the Qs, look at what's happening all the way from the levels from May. That's 315, and I look all the way up to 383. Expected. And where are we heading? Yes, we're heading to the 38.2% of Fibonacci. That's all the way at this level, 357. If we let go of that level, then don't be surprised. We do have on the table 61.8%. That will be 341. For us to have that debacle, that massive disaster to the bull market in technology, then we'll have to go back all the way to 315, and then we have to break. If that happens, then definitely we have on the table again 296, and that, technically speaking, will be a double bottom that will give us more than enough evidence for us to think that we're into a massive run between 2022 and 2023. And finally, I want to talk about this. And like I said, I will come back later this week with more technical clues, ideas behind my massive long in small caps. Not looking good, absolutely lagging behind the S&P 500 and the Qs, the Nasdaq. The tech index, but definitely we are at the bottom of that range, which is 78.6%, way different from where the Qs are, and at the same time SPY. 214. Don't be surprised. I would love to see it surprising everyone, and a lot of people will cry, but the 161% Fibonacci, 198, that will be lovely. It will come back to all this level, crucial level back on this block between 200 and the 191 level back in last week of December 2020. This is not to say that will be something that you like to experience, but definitely you should have some cash to buy if we have another 6% pullback in small caps, and you want to be ready and be a buyer if we have something close to minus 8.50%. This is absolutely something that you should be looking not only to trade in the short term and medium term, but definitely looking for passive investment. This is something that is a candidate to be part of your 401k. So definitely look at IWM, iShares Russell 2000 ETF. There is gargantuan amount of money to make here. And I'm just going to take a look and give you an idea what may happen when we finally break this resistance. If you look at this look at the asset this way, you actually have some sort of triangle, not a perfect thing. And the very conservative idea will be this. Pay attention. If I move from this low to this high, we have a 29-point upside. That's a 14% expansion of the asset class. And when I do that, I look at rotation and think about that. To make new highs, you need a lot of buyers or someone that it's building up, pretty much loading the boat. And when that happens, you know, they want it to move way higher than the previous high. So 29 points will take you at least taking you to 263. That it's a 12% expansion. This is my conservative. But if I look at the most aggressive view in the medium term, in about 2 years' time, then I'm looking for something that will take us 14%. That will take us to the neighborhood around 267, the same idea. This is just the basic view on the matter. From there, you have to think the following. If you're buying now, if you start buying now, for example, for your 401k, your retirement account, either Roth, you're looking for 23%. You're not going to find that now any traditional banking product, but you have to think like you may need some time to digest potential drawdowns. That's just the way it is. That's just the way the business works. All right. So that counts for at least a decent double-digit return in the next 24 months playing small caps in a very passive outlook. Now, the one thing I want to remind you, if you look at the description of this video, there's a link, and there you will find a broadcast. That broadcast will just explain to you what I do with SDF, Statistical Disruptive Flow. And what that is that I'm looking for who is going to win. I'm not really siding with institutionals or meme traders. We just want to know exactly who knows something. And we found those blips, those disruptions in the US options market by understanding this concept of SDFs. And that allowed me to pick opportunities like AMD, almost 700% in less than 4 months, or an amazing 1,000%. That's right, 1,000% with Clough, ticker CLOV, in less than 24 hours. So whatever you hear out there, people doubling accounts, you do have the potential to really bring some nice profits if you start playing SDF. So pay attention to that. So this is my conservative targets. I will come back, as I said again, later this week, talk more about the IWM, look at what Peter Lynch did back in his days, and understanding how, believe it or not, at the end of the day, it's coming, it will happen. Small caps will actually be a big theme in the next 10 years. And there's a little bit of research about that from Bank of America. So we'll talk about it. So today I just wanted to give you this view in the markets. Remember, trade cautiously. Always remember, this is a business, so you need to have some stop losses in place. And if you're looking to build up your portfolio for the next 5 or 10 years, then absolutely, this is the best time. Don't pay attention to the Morgan Stanley headlines. Those, in fact, are great ideas that someone that is looking in the long term, remember, the long term, to build wealth, then you definitely want to be in the US stock market. And thank you for watching, guys. So remember, there's the link. Click on that link, okay? Watch the broadcast. It's free. I don't bite, all right? And I'll see you on the next video. Until then, you know what it is. Us!